All right, let's dive into Yes Bank's latest financials.
The quarterly results,
Yeah, we're talking quarterly results.
investor presentation.
Investor presentations.
Mm,
The whole 9 yards from January 25th, 2025,
right.
detailing their performance for the quarter ending December 31st, 2024.
Okay.
So by the end of this deep dive, you'll not only know the key numbers,
Right.
you'll understand what they signal about Yes Banks.
Game plan.
Yeah, their game plan for the future.
Exactly. We're going beyond just the headlines.
Right.
Think of it like that you're getting the insider scoop
Okay.
on their strategy, the highlights,
Hmm.
and yeah, even some potential bumps in the road ahead.
Okay, let's unpack this first off. Yes Bank is reporting a record-breaking quarterly net profit since its reconstruction back in 2020.
Wow.
INR 612 crore.
That's a big number.
That's a number that makes you sit up and take notice.
Yeah.
164.5% increase year over year,
Uh-huh.
and a 10.7 jump from last quarter. It's been a while since we've seen numbers this strong from them.
It has.
What's the story behind this resurgence?
Well, what's interesting here is this isn't just a flash in the pan.
Okay.
Yes, Bank has been steadily increasing its profitability for 5 straight quarters.
Wow.
This upward trend tells a story of a bank that's not just recovering, but thriving.
Mm-hmm.
It's a strong signal to investors that their turnaround strategy is working.
So what's fueling this success? Are they cutting costs, finding new revenue streams, or is it something else entirely?
It's a mix of factors.
Okay.
Their operating profit surged to INR 1,079 crore,
Okay.
a 24.9% jump year over year, and their return on assets is healthier,
Right.
hitting 0.6% compared to 0.5% last quarter.
Okay.
They've also managed to significantly reduce their provision costs.
Okay, so less money set aside for unexpected expenses.
Think of it like this.
Mm-hmm.
If you're setting aside less money for unexpected expenses,
Yeah.
it means you're feeling pretty confident about your financial situation.
Right, so it sounds like they're cleaning up shop and becoming more efficient.
Yeah.
But strong financials are only part of the story.
Right.
Where is Yes Bank finding the fuel for this growth?
One word,
Oh.
deposits.
Ah.
They're doing a phenomenal job attracting deposits.
Really?
A 14.6% year-over-year growth, actually outpacing the industry average.
Okay.
And gives their CASA ratio.
CASA ratio.
That's the proportion of deposits in current accounts and savings accounts.
Right.
Is up to 33.1%.
Okay.
That's a 340 basis point increase year over year,
Wow.
and 110 basis points higher than last quarter.
Wow, so they're building a solid foundation
Yeah.
of reliable and affordable funding.
Yeah, it's like building a house.
Okay.
You need a strong base
Yeah.
before you start adding fancy features.
Right, but is it enough to simply attract these CASA deposits?
That's a great question.
What are the challenges in maintaining that ratio as Yes Bank grows?
You've hit on a crucial point.
Okay.
Maintaining a healthy CASA ratio is an ongoing challenge,
Okay.
especially as a bank expands.
Mm-hmm.
It requires striking a balance
Right.
between attracting new customers and ensuring that a significant portion of those new deposits are in the form of current and savings accounts.
So how are they doing that? What's their strategy for making sure they get the right mix of deposits?
They're laser focused on 2 key segments:
Okay.
small, medium enterprises,
Right.
SMEs,
Right.
and mid-corporate clients.
Okay.
Both saw a 26.7% year-over-year growth in advances.
So they're going after these clients.
They are. It's a bold move going after these clients.
Why is that? Aren't those segments already well served by larger banks?
That's the conventional wisdom.
All right.
But Yes Bank sees an opportunity where others haven't fully capitalized.
Okay.
They're betting that SMEs and mid-corporates are hungry for a bank that understands their unique needs
Mm-hmm.
and is willing to provide tailored solutions.
Okay.
And they're backing that bet with action. They've rolled out a new digital platform called Yes Business,
Right?
powered by the Iris Biz app.
Okay.
It's designed to be a one-stop shop for these businesses,
Okay.
offering a suite of financial solutions beyond just lending.
So they're not just providing loans, they're building a whole ecosystem
Exactly.
to support these businesses.
Yeah, it's like they're saying,
Yeah.
we're not just your bank, we're your partner in growth.
Right. But what about their bread and butter retail banking? Are they
Right.
neglecting that segment while chasing after these businesses?
Not at all.
Okay.
But they are shifting gears.
Okay.
They've actually slowed down retail advances growth,
Oh, really?
down 3.2% year over year.
So on the surface, that might seem counterintuitive,
It might.
but it's a calculated move.
It is.
So what's the thinking there? Why pump the brakes on growth in a sector that's traditionally been so important for banks?
They're prioritizing profitability over sheer volume
Okay.
in the retail segment.
Hmm.
Instead of chasing every possible loan, they're being incredibly selective
Yeah,
about the types of loans they're extending.
right.
It's all about optimizing their product mix
Yeah.
and focusing on higher yielding assets.
So instead of just trying to grow their loan book, they're
Yeah.
being more strategic
Yes.
about where they put their money.
Exactly. It's like a chef carefully selecting the ingredients for a dish
Right.
rather than just throwing everything in the pot.
Okay, but what specific areas are they focusing on within retail banking?
They're zeroing in on secured business loans,
Mm-hmm.
personal loans, and affordable home loans.
Okay.
These are products that generally carry less risk for the bank
Right.
while still offering decent returns.
Makes sense. So even though they're slowing down growth,
Okay.
they're still making sure that each loan counts.
Yeah.
They're focusing on quality over quantity.
I like that quality over quantity.
But hold on.
Yeah.
We talked earlier about their focus on attracting casha deposits.
Right.
How does that fit into their retail strategy?
That's a great question.
Okay.
And it highlights the balancing act Yes Bank is performing.
Mm-hmm.
While they may not be chasing aggressive growth in retail advances,
Right.
they're still attracting a healthy flow of deposits from this segment.
Okay.
Retail and branch banking deposits grew by 21.8% year over year.
So they're building a strong and stable deposit base,
Yes.
even as they fine-tune their lending strategy
to
to prioritize profitability. It's like a two-pronged approach,
It is.
building a solid foundation of deposits
Yeah.
while carefully selecting the loans they make.
It's a smart strategy.
But no bank is perfect, right?
Of course not.
There have to be some areas where they're facing challenges.
Every bank has its challenges.
Right. What are some of the potential red flags
Yeah.
that investors should be aware of?
Well, you're right. Every bank has its challenges. And Yes Bank is no exception.
Okay.
One area that warrants attention is asset quality.
Right.
While the report shows some positive trends,
Okay.
there are also some subtle signs that require scrutiny.
Okay.
The gross non-performing assets, GNPA ratio, has decreased year over year to 1.6%.
Okay.
And net non-performing assets, NNPA, stand at a much lower 0.5%.
Mm-hmm.
Those are encouraging figures, but
But there's always a but, right?
there's always a but.
What's the catch?
The catch is that the reports also mention a rise in overdue balances,
Where?
particularly in the rural portfolio of their retail segment.
Okay.
This suggests that there are still pockets of stress within their loan book.
So it's not all sunshine and roses.
No, it's not.
Even with those positive overall figures,
Right.
there are some areas where they're seeing some cracks.
It happens.
It's a reminder that managing risk is an ongoing process for any bank.
Absolutely. It's a constant balancing act.
Okay, so they're making money,
Huh.
attracting deposits, being strategic with their lending,
Yes,
and even recovering some bad loans.
it's a good sign.
But there's one piece of the puzzle we haven't talked about yet. Their digital strategy.
Right.
Yes Bank has been making a lot of noise about their digital initiatives,
Yeah, yes.
especially with their dominant position in UPI payments. So what are they doing that's so groundbreaking?
Well, you're right. We can't ignore the digital elephant in the room.
Okay.
Yes Bank is undoubtedly a leader in digital banking,
Mm-hmm.
and their commitment goes far beyond just UPI.
So are they just offering the same old online banking services with a shiny new coat of paint?
Not even close.
Okay.
They've developed two flagship super apps,
Right.
Iris for retail customers
Okay.
and Iris Biz for businesses.
Okay.
These aren't just your typical banking apps.
Right.
They're designed to be comprehensive platforms
Mm-hmm.
that offer a wide array of features and services,
Okay.
aiming to provide a truly seamless and integrated banking experience.
It sounds like they're trying to create a whole new way of banking.
They are.
But is it just about bells and whistles, or is there a deeper strategy at play here?
Their digital push is much more strategic than just adding fancy features.
Okay.
By leveraging technology,
Yeah.
they're aiming to lower operating costs,
Mm-hmm.
enhance customer engagement,
Okay.
and ultimately boost their overall efficiency and competitiveness.
It's about transforming the way banking is done,
It is.
not just tweaking the existing model.
Exactly.
That's ambitious.
It is.
But it also sounds like a smart move.
It is a smart move.
Digital banking is the future.
Absolutely.
And Yes Bank seems to be embracing it head on.
They are.
But with great ambition comes great challenges.
There are always challenges.
What are some of the hurdles they'll need to overcome to make this digital vision a reality?
You've got to, one of the biggest challenges
Mm-hmm.
is maintaining that leadership position in the digital space.
Yeah, okay.
The banking landscape is constantly evolving.
Right.
New technologies are emerging, customer expectations are changing,
Mm-hmm.
and the competition is fierce.
So they can't afford to rest on their laurels.
They need to constantly innovate, adapt, and invest.
So how do they stay ahead of the game?
Ooh.
What's their plan for ensuring that their digital strategy doesn't become obsolete?
They need to keep enhancing their digital offerings,
Right.
anticipating customer needs,
Mm-hmm.
and responding swiftly to emerging trends.
That's a lot to juggle.
It is.
Are they up to the task?
Well, they've certainly shown a willingness to invest in the future.
Mm-hmm.
The reports highlight some impressive numbers related to their digital platforms.
Give me an example.
For example, Iris boasts over 34 lakh registered users,
Okay.
with 19.2 lakh monthly active users.
Wow.
And those numbers are growing steadily.
That's great.
A 10.9% quarter-over-quarter increase in monthly active users indicates that Iris is gaining traction among customers.
It sounds like they're building a real community around these apps.
They are.
But it's one thing to build a cool app.
Right.
It's another to get people to actually use it. How are they driving customer engagement and ensuring that these apps become more than just a novelty?
They're using data analytics to understand customer behavior,
Okay.
personalize offerings,
Right.
and provide proactive support.
Mm-hmm.
They're even using gamification techniques to make banking more fun and engaging.
Gamification
Gamification.
in banking.
Yes.
I wouldn't have thought those two things would go together.
It might sound surprising,
Yeah.
but it's a growing trend in the industry
Okay.
by incorporating game-like elements into their apps.
Mm-hmm.
Yes. Bank is trying to make banking more interactive and rewarding for customers.
Right.
It's a way to keep people engaged and coming back for more.
It's a smart move.
It is.
It's like turning those mundane banking tasks into something fun and maybe even a little bit addictive.
Yeah, keep them coming back for more.
But before we get too carried away with their digital success,
Right.
let's address a challenge that's unique to the Indian banking landscape.
Okay.
Priority sector lending, PSL shortfall.
Right, we can't ignore that.
Now, it's a regulatory requirement for banks in India
It is.
to allocate a certain percentage of their lending to specific sectors
Yes.
that are considered crucial for social and economic development.
Exactly.
So what happens if they don't hit those targets?
Failing to meet those targets results in penalties.
Oh,
It's like getting a parking ticket
right?
for staying too long in a restricted zone.
Right, so that's got to hurt their bottom line.
It can.
So how is Yes Bank navigating this PSL challenge?
They've adopted a multi-pronged approach,
Okay.
focusing on organic sourcing of PSL loans,
Mm-hmm.
partnering with business correspondents to expand their reach,
Okay.
and exploring inorganic interventions like purchasing PSL certificates from other banks.
Okay, so they're trying to cover all their bases.
They are.
But are these efforts actually working?
Well, the good news is they're making progress.
Okay.
The reports state that Yes Bank achieved a zero shortfall
Wow.
in overall PSL
Okay.
and subcategories for Q3 FY25.
That's a huge win.
It is.
It sounds like they're taking this challenge seriously
They are.
and finding creative solutions.
Yes.
But I have a feeling it's not a one-and-done situation.
You're right.
They'll need to keep working at it to
Mhm.
maintain that compliance.
PSL compliance is an ongoing journey,
Right.
and Yes Bank will need to constantly adapt and refine its strategy
Okay.
to stay on track.
Okay, we've covered a lot of ground from impressive profits and strategic shifts
Yeah.
to digital innovation
Right.
and regulatory hurdles.
That's a lot.
Before we move on, is there anything else we need to touch on in this part of our deep dive?
There's one more crucial aspect of Yes Bank's performance we need to explore,
Okay.
their capital adequacy.
Capital adequacy.
It's a fundamental indicator
Yeah.
of a bank's financial strength and stability.
It's like a bank's safety net.
It is.
It indicates their ability to absorb potential losses and maintain stability even in turbulent times.
Exactly. So let's dive into the details of Yes Bank's capital position and understand what it means for their overall outlook.
All right.
The reports highlight that Yes Bank's Common Equity Tier 1, CET1 ratio, a key measure of capital strength,
All right.
stands at a solid 13.3%,
Okay.
while their total capital adequacy ratio, CRAR, is at 15.9%.
Okay.
Both these figures are well above the regulatory requirements.
That's reassuring to hear.
It is.
A strong capital base provides a buffer against unforeseen challenges
Absolutely.
and gives Yes Bank greater flexibility to pursue growth opportunities. It's like having a healthy savings account.
It is.
It gives you peace of mind and the freedom to make bold moves when the opportunity arises.
Precisely. A healthy capital position is a cornerstone of financial stability.
Right.
And it's evident that Yes Bank is prioritizing this aspect.
Okay.
It allows them to expand their lending activities, invest in new technologies, and navigate economic uncertainties with greater confidence.
So they're building a fortress
Yeah.
to protect themselves from any potential storms on the horizon. But are there any cracks in this fortress that investors should be aware of?
While their capital adequacy ratios are strong,
Right.
it's essential to remember that capital requirements can change over time.
Okay.
Regulatory changes, economic conditions, and even the bank's own growth strategy can impact how much capital they need to hold.
Okay.
So while their current position is solid, it's something investors should monitor closely.
Okay, so we've got a bank that's making impressive strides in profitability, strategically shifting its focus in certain segments, embracing digital transformation,
Yes.
navigating regulatory hurdles,
Yeah.
and maintaining a robust capital base.
It's a lot to take in.
It is a lot to take in.
But we got through it.
We did. Anything else we should touch on before we wrap up this part of our deep dive?
I think we've covered the key highlights for now.
Okay.
But this is just the tip of the iceberg.
Oh.
In the next part,
Okay.
we'll delve deeper into some specific elements of Yes Bank's strategy and financial performance, exploring the nuances and potential implications for investors.
Great. I'm already intrigued to see what other insights we uncover.
Me too.
But for now, we'll leave you with this.
Okay.
Yes Bank is undergoing a remarkable transformation, and it's a story that's worth paying attention to.
Exactly. Stay tuned for part 2, where we'll continue our deep dive into Yes Bank's world.
All right, we'll see you next time. Welcome back. We've already laid the groundwork,
Yes.
exploring Yes Bank's overall performance and some of their key strategies.
Right.
Now it's time to roll up our sleeves and get into the nitty-gritty.
Exactly. We're going to zoom in on some of those strategic moves
Oh,
and see how they're playing out in the numbers.
Right.
It's like examining the brushstrokes of a masterpiece to understand the artist's technique.
First up, let's revisit this retail assets profitability over growth approach.
Okay.
It still feels a bit counterintuitive to me.
Right.
Most banks are chasing growth, but Yes Bank seems to be taking a more measured approach.
Right.
It's like they're choosing to run a marathon instead of a sprint.
It's definitely a different mindset,
Right.
and it reflects a long-term vision.
Okay.
They're deliberately slowing down retail advances growth
Right.
to focus on improving profitability within this segment.
Okay.
Instead of chasing every loan opportunity, they're carefully selecting the ones that align with their risk appetite
Okay.
and return expectations.
So they're being more selective about
They are.
who they invite to their party.
Right.
You want to make sure that the guests are the right fit for the atmosphere they're trying to create.
Exactly.
But how are they making these decisions? What factors are they considering when choosing which loans to pursue?
They're prioritizing what they call ROAO accretive products.
ROA accretive products.
Products that generate a higher return on assets.
Okay.
They've specifically mentioned secured business loans,
Right.
personal loans, and affordable home loans as areas of focus. These products tend to be less risky than unsecured loans or credit cards.
So they're essentially playing it safer,
They are.
going for loans that are more likely to be repaid.
Exactly.
It's like investing in bonds instead of high-risk stocks.
Yeah.
You might not see those explosive gains,
Right.
but you're also less likely to lose your shirt.
It's all about managing risk.
But hold on a second.
Yeah.
Didn't we discuss earlier that they're seeing some stress in their rural portfolio,
We did.
particularly with overdue balances?
Yes.
Doesn't that contradict this whole focus on lower risk assets?
It's a good point.
Okay.
And it highlights that no investment is entirely risk-free.
Right.
Even with secured loans, things can go wrong.
Of course.
Economic downturns, unforeseen circumstances, and other factors can impact borrowers' ability to repay.
Right.
The rise in overdue balances in the rural segment suggests that, yes, bank needs to be extra vigilant
Okay.
in managing risk, especially in this area.
So it's like they're walking a tightrope. They need to find the right balance between pursuing profitable opportunities and managing risk effectively.
It's a constant dance
Yeah.
between pushing forward and staying grounded.
Now let's shift gears.
Okay.
and talk about another interesting aspect of their retail strategy.
Right.
The shift towards internal sourcing channels for their retail assets.
Right. They're moving away from relying heavily on external agents or direct selling agents, DSAs, to originate loans.
Okay.
They're instead leveraging their branch network and digital platforms to find and vet potential borrowers.
So it's like cutting out the middleman.
It is.
They're taking ownership of the entire process from finding customers to evaluating their creditworthiness.
Exactly.
But isn't that a lot more work?
It might seem that way on the surface.
Okay.
But Yes Bank sees this shift as a strategic advantage.
Right.
By controlling the sourcing process, they can ensure greater quality control,
Okay.
reduce the risk of mis-selling, and potentially lower costs in the long run.
So it's a trade-off.
It is.
They're putting in more effort up front
right.
to ensure that they're getting the right customers and the right loans.
It's about being more selective.
It's like building a house with your own hands.
I like that analogy.
It takes more time and effort.
It does.
But you have complete control over the quality and craftsmanship.
Exactly.
But let's be realistic. Building a robust digital platform and training your branch staff to handle loan origination effectively requires significant investment.
It does.
Are they prepared to make those investments?
Absolutely. They're investing heavily in technology, training, and infrastructure to support this transition.
Okay.
They see it as a necessary step
to
building a more sustainable and profitable retail business.
So they're playing the long game.
They are.
They're willing to make short-term sacrifices for long-term gains.
That's the key to long-term success.
It's like planting a seed.
Yeah.
You have to nurture it, water it,
right.
and wait patiently for it to grow into a strong and fruitful tree.
I agree.
But enough about retail banking. Let's talk about something a bit more exciting.
Okay, what's that?
Their digital initiatives.
All right.
We touched on their super apps, Iris and Iris Biz, earlier. But let's dive deeper into how these apps fit into their overall strategy.
These apps are at the heart of their digital transformation.
Okay.
They're not just about providing banking services.
Right.
They're about creating a whole ecosystem that caters to customers' financial and lifestyle needs.
It's like having a personal assistant for all your money matters.
It is.
But how are they making these apps stand out in a crowded market?
Right.
Aren't there tons of banking apps out there already?
There are plenty of banking apps.
Right.
But Yes Bank is aiming to create something different.
Okay.
They're not just replicating traditional banking services in a digital format. They're using technology to create new and innovative solutions.
Okay, so what are some of these innovative solutions?
For example,
Yeah.
Iris offers personalized financial management tools,
Okay.
investment options, insurance products, and even lifestyle services like travel booking and bill payments.
Wow, so it's about integrating all aspects
It is.
of a customer's financial life into one convenient platform.
It's all about convenience.
It's like a Swiss Army knife of financial services.
I like that.
You've got all the tools you need right at your fingertips.
Right there in your pocket.
And for businesses, Iris Biz is equally comprehensive.
It is.
Offering over 100 banking features.
Wow.
Including payments, collections, trade finance, supply chain management, and more.
It's a lot.
It is.
It's designed to be a one-stop shop for businesses of all sizes.
Right, so they can manage their accounts.
They can.
Make payments, track their finances, and even get access to credit.
Right.
All within a single app.
All in one place.
So they're not just building apps, they're building relationships.
Exactly. They're trying to become indispensable partners for both individuals and businesses.
But building a great app is only half the battle.
Right.
How are they getting people to actually use these apps? Are they just relying on word of mouth?
They're going beyond traditional marketing strategies.
Okay.
They're leveraging data analytics to personalize their offerings, anticipate customer needs, and provide proactive support.
Okay.
They're even using gamification techniques to make banking more fun and engaging. Gamification.
In banking, I have to admit, I'm still wrapping my head around that concept.
I know it's a new concept for a lot of people.
Yeah.
Think of it as incorporating game-like elements into the app experience.
Okay.
Things like points, badges, rewards, and challenges can motivate users to engage with the app more frequently.
Okay.
And explore different features.
So it's a way to make those routine banking tasks.
It is.
More enjoyable and rewarding.
Exactly. It's all about making banking more fun.
It's like turning your banking app into a fitness tracker for your finances.
I like that.
You get points for making smart decisions and staying on top of your goals.
Exactly.
It's a clever way to keep users engaged and motivated.
It is.
But let's be realistic. No strategy is foolproof.
That's true.
What are some of the potential challenges they might face in this digital realm?
The biggest challenge is staying ahead of the curve. The digital landscape is constantly evolving. New technologies are emerging, customer expectations are changing, and the competition is relentless.
So how do they stay ahead of the pack?
They need to be agile, innovative, and constantly adapting. They need to invest in emerging technologies like artificial intelligence and machine learning to personalize the customer experience and enhance their security measures.
So it's a high-stakes game?
It is a high-stakes game.
But it seems like they have the right mindset. They're not afraid to experiment, take risks, and push the boundaries of what's possible in banking.
They're definitely pushing the boundaries.
It's an exciting time to be watching this space.
It is.
And it's not just about technology. They're also investing in their people.
Exactly.
They're providing training and development programs to equip their employees with the skills they need to thrive in the digital age.
It's all about investing in the future.
So it's like they're building an army of digital warriors.
I like that.
Ready to conquer the challenges and seize the opportunities of the future.
Not ready for anything.
But let's not forget about the past. Yes, bank has faced some significant challenges in recent years.
They have.
They went through a period of turmoil, facing a crisis of confidence and a sharp decline in their financial performance.
It was a difficult time for them.
So how has this experience shaped their current strategy? Are there any lingering scars from that difficult period?
Well, they've learned valuable lessons from that experience. They've strengthened their risk management practices, cleaned up their balance sheet, and focused on rebuilding trust with investors and customers.
So it's a story of redemption.
It is.
Resilience and transformation.
They've come a long way.
But are investors convinced that they've truly turned the corner?
Well, the market seems to be responding positively to their efforts. Their stock price has been steadily climbing. And their recent financial results have been impressive. But it's important for investors to do their own research.
Of course.
Carefully analyze the numbers and understand the risks involved.
Always sound advice.
Yes.
Investing is never a sure thing.
That's true.
But it seems like Yes Bank is doing everything right to regain the confidence of the market.
It does seem that way.
But let's not forget about one of the unique challenges they face in the Indian banking landscape.
Okay, what's that?
Priority sector lending.
We can't ignore that crucial aspect.
It's a requirement for banks in India.
It is.
To allocate a certain percentage of their lending to sectors deemed essential for economic and social development, like agriculture, small-scale industries, and renewable energy projects.
Exactly.
Now, it's a noble goal.
It is.
But it can also be a tough balancing act for banks.
It can.
Failing to meet these targets can result in penalties. Forcing banks to park funds with the Reserve Bank of India at low returns.
It can be a significant cost.
So it's a potential drain on profitability.
It is.
How is Yes Bank addressing this challenge?
They're taking a multi-pronged approach. They're actively working to increase their organic lending to priority sectors by expanding their reach in rural areas, developing specialized loan products, and partnering with business correspondents who have deep local knowledge.
So they're getting their hands dirty.
They are.
Going out into the field and building relationships with borrowers in these underserved segments.
They're committed to making a difference.
It's like they're not just checking boxes to meet a regulatory requirement. They're genuinely trying to make a positive impact.
I agree.
But are they making any real progress?
They are seeing positive results.
Okay.
The reports highlight that they achieved zero shortfall.
Wow.
In overall PSL and subcategories for Q3 FY25.
So their efforts are paying off.
They are.
But it's an ongoing process.
It is.
They can't just rest on their laurels.
Absolutely. They keep pushing forward, constantly adapting their strategies to meet the evolving needs of these priority sectors.
It's like they're running a marathon. But instead of a finish line, there's a constantly moving target.
It's a challenge, but they seem to be up for it.
But let's zoom out for a moment and look at the bigger picture. What does Yes Bank's performance in these specific areas tell us about their overall approach and mindset?
To me, it suggests a bank that's not afraid to make tough choices, embrace change, and challenge conventional wisdom.
So they're not just following the crowd.
They're not. They're forging their own path.
And
they're doing it with a focus on long-term sustainability and value creation.
It's like they're the rebels of the banking world.
I like that.
Shaking things up and rewriting the rules.
Yeah, they're definitely shaking things up.
But are they playing with fire?
That's the question, isn't it?
Is this bold approach too risky?
There's always risk involved in any business, especially in the financial sector.
Right.
But Yes Bank seems to be managing that risk carefully.
They're
not just taking reckless gambles. They're making calculated decisions based on a deep understanding of the market, their customers, and their own capabilities.
So it's a high-wire act.
It is.
But it seems like they have a steady hand.
They do.
And a clear vision.
And they're not doing it alone. They're building a strong team, investing in technology, and fostering a culture of innovation. They're creating an ecosystem that supports their ambitions and empowers them to achieve their goals.
It's an inspiring story.
It is.
And it's one that we'll continue to follow closely.
I agree.
But for now, we need to take a quick break. When we come back, we'll wrap up our deep dive by exploring one final crucial element of Yes Bank's journey.
Sounds good.
Their commitment to social responsibility through priority sector lending and the potential impact on their future. Okay, we're back and ready to wrap up our Yes Bank deep dive.
Sounds good.
We've covered their impressive turnaround, financial strategies, digital moves.
It's a lot.
But there's one more piece before we finish up.
Got to circle back to priority sector lending.
PSL. Yeah. It's a unique challenge for banks in India.
It is.
And it plays a significant role in Yes Bank's story.
Definitely.
So just to recap, it's this requirement for banks to allocate a certain percentage of their lending to sectors that are considered vital for India's economic and social development.
Things like agriculture, small-scale industries, renewable energy.
Yeah, areas that might not always attract the same level of investment as those flashier sectors.
Exactly. It's about balance.
So it's about making sure that everyone has a chance to benefit from growth, not just the big players.
Precisely.
But it's not just about doing good, right? There are real financial implications for banks if they don't meet these PSL targets.
Definitely. If they fall short. They face penalties, having to park funds with the Reserve Bank of India at low returns.
So it can be a drag on their profitability if they're not careful.
Absolutely.
So it's this balancing act, right? They need to do good for the community, but also make sure they're staying financially healthy.
It's finding that balance.
How is Yes Bank approaching this challenge?
Well, they've got this multi-pronged approach.
We talked about organic lending, partnerships with business correspondents, even buying PSL certificates. What does that actually look like in practice?
So think of it like building a house. Organic lending is like laying the foundation, Building that strong base of direct lending to those priority sectors.
So expanding their presence in rural areas.
Exactly. Maybe setting up specialized branches, designing loans tailored to those specific needs.
So it's about being more than just a lender.
It is.
It's about becoming a partner. Understanding those challenges these businesses face. Providing solutions that go beyond just providing capital.
Exactly, and that's where business correspondents come in. They're like the local contractors. The folks on the ground who know the community, speak the language, can help bridge that gap between the bank and the borrowers.
Okay, so facilitating those loan applications, providing support.
Exactly, making the whole process smooth and accessible.
So Yes Bank is not just sitting in their ivory towers dictating terms.
Not at all.
They're getting their hands dirty.
They are.
Building relationships, working side by side with these communities. But what about those PSL certificates? Sounds like a bit of a shortcut.
Think of it more like a temporary support beam. Purchasing those certificates from banks that have exceeded their PSL targets allows Yes Bank to meet those requirements while they're still building up their organic lending portfolio.
So it's a short-term solution to bridge the gap?
It is.
But are those efforts actually paying off?
Well, the numbers speak for themselves. They achieved zero shortfall.
Wow.
In overall PSL and subcategories for Q3 FY25.
That's incredible.
It's a big accomplishment.
Shows they're taking it seriously.
They are.
It's like they're hitting a home run in a game where just getting on base is a victory.
I like that.
But, as you said before, It's an ongoing process.
It is. The goalposts are constantly shifting.
Right.
Yes, bank has to keep adapting, keep innovating, finding those creative solutions to meet those requirements while staying profitable.
It's a challenge, no doubt.
It is.
But also an opportunity.
Definitely.
A chance to do good for the community, make a real difference, and build a business that's both profitable and purpose-driven.
You hit the nail on the head there.
So final verdict time.
All right.
We've seen their turnaround, bold strategies, embrace of digital, commitment to social responsibility.
A lot.
What does it all mean for their future?
You know, I see a bank that's not just surviving, but thriving.
Right.
They've faced those challenges head on, learned from mistakes.
Yeah.
Emerged as a force to be reckoned with.
It's a testament to resilience, right?
It is.
The ability to bounce back from adversity, adapt to change, create something new and better.
And they haven't just adapted, they've innovated.
Yeah, and it's a reminder that the world of finance isn't just about numbers.
Right.
It's about people, their dreams, their aspirations.
Absolutely.
And that power of collaboration to create a better future.
I think that's what makes this whole deep dive so fascinating.
Right. It's not just analyzing financial statements.
No.
It's about understanding that human story.
It is.
Behind those numbers, the choices, the risks.
The triumphs.
That shape the course of a business. And ultimately, the world we live in.
And we've only scratched the surface here.
Right.
Always more to explore.
So if you're intrigued by Yes Bank's story,
yeah,
I encourage you to keep digging.
Definitely.
Explore their website, read their reports, form your own conclusions. But most importantly, keep your mind open to the possibilities.
Absolutely. The world of finance.
Right.
Just like life, the only constant is change.
Yeah.
And that journey is often more rewarding than the destination.
Well said. I think that's a great place to wrap up our deep dive into Yes Bank.
I agree.
Until next time, keep learning, keep exploring, and keep questioning.
Let's see you then.